Money rules the world. It's present in almost everything we do. Buying food, paying rent, traveling, studying, even dreaming of a better future. But few ask themselves, where does money come from? Who creates it? Who decides its value? And above all, who really controls this invisible system that drives entire societies? The financial system on the surface seems simple: banks, currencies, investments, taxes. But behind this facade lie hidden mechanisms, networks of power and decisions made far from public view. It's the so-called shadow financial system, a global machine that influences nations, governments, and ordinary people without them even realizing it. Stay until the end, because in this video we'll explore the pillars of this system: the role of central banks, the logic of public and private debt, and the network of power that defines who truly controls the world's money. To understand the current system, we need to go back in history. For thousands of years, trade was conducted through direct exchange, barter, a chicken for a few pounds of wheat. But this model had its limits. How could you exchange something indivisible, like a cow, for small items? Thus currency was born, first in the form of precious metals like gold and silver. For centuries, gold was the basis of the economy. It was valuable, durable, and limited, which lent confidence to exchanges. Kings and empires minted gold coins, and a nation's wealth was measured by the metal it held in its coffers. But there was a problem. Gold is heavy and difficult to transport in large quantities. To solve this, the first banks emerged, which stored the gold and issued paper receipts, promissory notes that could be exchanged for the metal. These papers began to circulate as if they were money. It was the embryo of what we know today as fiat currency. In the 17th century, Sweden created what is considered the first central bank. But it was in England that this model truly took hold. In 1694, the Bank of England was founded to finance government debts amid costly wars. Here's a crucial point. Central banks were born, from the beginning, with a dual function. On the one hand, to ensure the stability of the currency. On the other, to serve indebted governments by issuing money and controlling loans. Over time, the idea spread. France, Germany, the United States, and then almost every nation created their own central banks. They became the only ones authorized to issue each country's official currency. But the major turning point came in 1913, with the creation of the Federal Reserve, the central bank of the United States. The story of its founding is shrouded in mystery. Businessmen and bankers met secretly on Jekyll Island, Georgia, to design the model for the new system. The Fed was born as an institution independent of the government, but heavily influenced by large private banks. For a long time, central banks kept their currencies pegged to gold. Each dollar, pound, or franc corresponded to a fixed amount of the metal. This ensured confidence and limited the rampant printing of paper. But after World War II, the United States became the dominant economic power. In 1944, the Bretton Woods Agreement established that the dollar would be the global reference currency, and other countries would maintain their currencies pegged to it. The dollar, in turn, would be pegged to gold at $35 per ounce. This system lasted until 1971, when President Richard Nixon decreed the end of the dollar's conversion into gold. From then on, the world's currencies became fiat money, fiduciary money, based solely on trust in governments and central banks, with no physical backing. This gave central banks and the financial system unprecedented power, the ability to create money out of thin air. If money can be created digitally, why do countries remain in debt? This is one of the most intriguing questions of the hidden financial system. The answer lies in how loans work. When a government needs money, it issues government bonds. Banks, investors, and even other countries buy these bonds, receiving interest in return. The central bank often participates in this process, purchasing bonds to inject liquidity into the economy. The detail is that this money is created in the form of debt. Every currency in circulation in the world represents, in some sense, someone's debt. For money to exist, someone must be in debt. This is why global debt never decreases. In fact, it grows at a rapid pace. It is estimated that today the sum of public and private debt in the world exceeds global GDP several times. It is as if there were more debt than real wealth. In theory, central banks are independent institutions that act for the good of the economy. but in practice their independence is relative. In the United States, the Federal Reserve is composed of a board of governors appointed by the president, but it also includes 12 regional banks, some of which have equity stakes in private banks. In Europe, the European Central Bank has autonomy from governments, but responds to the interests of the Eurozone as a whole. The big question is, if central banks can create money, who oversees this power? Who decides how much money enters the system? Or which banks will be bailed out in a crisis? Many critics argue that central banks act more in favor of the financial sector than of ordinary people. When a crisis occurs, as in 2008, trillions of dollars and euros are printed to save banks and businesses, while ordinary citizens face unemployment, inflation, and austerity. Besides central banks, there are international institutions that wield enormous financial power. The IMF, International Monetary Fund, and the World Bank lend money to countries in difficulty, but demand compensation, such as public spending cuts and privatizations. These measures, known as structural adjustments, often deepen inequalities and weaken local economies, creating dependence on the global system. There is also the Bank for International Settlements, BIS, known as the Central Bank of Central Banks. Little known to the general public, the BIS, headquartered in Switzerland, brings together representatives of the world's largest monetary authorities and sets global policies. It is one of the most obscure parts of the hidden financial system. Another facet of the hidden system is the dominance of the dollar. As the world's reserve currency, the dollar is present in over 80% of international transactions. Countries accumulate dollar reserves, companies trade oil and commodities in dollars, and the global banking system uses the dollar as a benchmark. This gives the United States unparalleled power, the ability to sanction countries, freeze assets, and control financial flows. Whoever controls the dollar controls much of the global economy. Money creation is not neutral. When central banks inject liquidity, it often results in inflation. The purchasing power of ordinary people declines, while holders of financial assets, stocks, real estate, gold, benefit from the appreciation. The banking system also multiplies money through credit. When you take out a loan, the bank doesn't hand over cash held in a vault. It creates new numbers in a digital account. This is called a fractional reserve system. This mechanism causes the amount of money in circulation to be much larger than the physical amount in existence. From time to time, the financial system experiences crises. The most famous in recent times was in 2008, when banks took excessive risks in the real estate market. When the bubble burst, the system nearly collapsed. The response was to print money on a massive scale, so-called quantitative easing. What became clear was the system is not stable. When there is a collapse, governments and central banks bail out the big players, and the ultimate cost falls on citizens through taxes, inflation, or social cuts. In recent years, central banks have been testing so-called CBDCs, official digital currencies. Unlike paper money, they would be fully electronic, controlled directly by the central bank. This model could bring benefits, such as faster transactions and lower costs. But it also raises serious concerns. A system in which every transaction is recorded could mean unprecedented control over people's financial lives. The hidden financial system doesn't have a single owner, but rather an interconnected network of central banks, large institutions, investment funds, and corporations. It is sustained by the logic of debt, the artificial creation of money, and the dominance of a few key currencies. Most people never realize this. They work, pay taxes, use cards and banking apps, but they don't question the invisible mechanism that defines the value of each coin in their pocket. The hidden financial system isn't just an economic issue. It's a question of power, freedom, and the future. Understanding how it works is the first step toward questioning who really rules the world and whether it's possible to change the rules of this game. In Stoicism, Seneca reminded us that we don't control the world, but we do control our choices. True power lies in seeing reality without illusions, questioning what seems immutable. And will you continue playing the system's game, or will you dare to step outside the matrix and see what lies beyond it? Did you like the video? Then subscribe to the channel